Alright, welcome to another video. Trying to not make this one as long as the last one I made. Little daily trade recap. Today my psychology was not the best, and today is probably the first day I've over traded in at least a month. I still came out green on the day, but I definitely took too many trades, but I still want to be transparent and show y'all what I took. Some of them were some good trades, some of them were some not good trades. Ultimately, what I took away from the day, which I already know this, but in the moment, I was just kind of caught up in the markets. And I think what you'll learn from this, no matter what your strategy is, if you just take trades based off of your strategy and your model when it presents itself, you will avoid the losses. Not, this kind of counts, but I don't know, this, follow your model. Anyways, in the morning, get rid of those. In the morning, what I'm looking at is this accumulation on 5 minute. My model revolves around AMD. Accumulation. I want to see manipulation. We have a 4-hour fair value gap here that I'm looking at as well. Just keeping that in mind. 4-hour fair value gap, little sweep of liquidity here. But yeah, dude, just AMD, man. I kind of like, if there's fair value gaps to target, it's a good confluence. But for me, AMD is more reliable than anything else, and you will see that later on in the video when we come into this 4-hour fair value gap. Something I should have kept note of too. Okay, anyways, you'll find out in a minute. Accumulation. Market opens. What do? This is right before market opens. So here, market opens. We had just swept those London highs up here. Okay, accumulation. Mark this out in red. Manipulation. Sweeping previous session highs. Okay, that's about everything we need to go lower, right? And there's a 4-hour fair value gap down here. That's about everything we need to go lower. Now we need our entry. My entries revolve around 2 things, most 3 things: inverse fair value gaps, the first presented fair value gap, and what I've been working on, which I'm calling the trident theory, which is pretty much a rejection block on the 1 minute or the 5 minute. I'm calling it trident theory because it's more of an entry for me than anything else. And I really only use it on the 1 minute and the 5 minute, which is not what most people do. But anyways, so we have this big wick that just swept liquidity. So we want to see this get respected. And I'll pop up what I'm usually looking for, like right here or something, with the trident theory as my entry. And I found it to be a lot more reliable than the first presented, and you'll see why that in a second too. Anyways, and I took a little loss right here because we're testing this wick, man, but I put my stop too low because we inversed this gap. I didn't think it would come back above this high, so it looked something like this, and then we barely swept my stop loss, which it was on me. You know, that was not really following my entry model fully. So this is what I wanted to see right here. And this is what I'm talking about. Okay, this is the first presented fair value gap right here. I marked these out in gray. You will learn a lot in this video. I'm telling you that right now. Okay, we just inversed this and we swept the 930 open. A lot of people are getting long right here. We're not. Okay. This is why I say the first presented isn't that reliable. It's a good idea of where prices to reverse, but I don't like setting my stop losses based around it. Because it could come up here. I mean, it could come anywhere. You know what I'm saying? Really, this was a decent entry too. I like the 3-wick pattern with the third candle closing in the direction of the accumulation we just manipulated out of to start the distribution leg. This is part of the distribution leg at this point. And like I said, take away all the entry criteria. If you're just looking at this, it's obvious, you know. And we respected CE of this little 1 minute reject, blah, 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 right? This right here is what I really, really like to see, man. I love, love, love seeing this, man. I'll zoom in a little bit. I like to see a wick sweeping some sort of liquidity, which is this fair value gap. I like to see another wick that goes higher. I don't care what color these wicks are. I mean, they're usually both bullish, or this one will be bearish. And if I see a wick respect this wick, because we're treating these wicks as fair value gaps, if I see this wick respect this wick and close bullish, I'm not entering it. All right, it has to close bearish. So at this point, I'm in shorts in this trade. It's pretty beautiful, and it was pretty much just making up my loss that I had taken earlier. And this is where the bad psychology started to come into play. If I would have just waited for my model, I wouldn't have been break even at this point. And I can't even tell you some of the other trades I took after this. Actually, I could probably find 1 or 2, but they did not meet my criteria, and I'm about to show you. Actually, we'll skip into it a little bit. I remember one I took, right? And this is why overall context is important. Okay. Actually, yeah, this was it. Let me back up a little bit. We have this tiny, I mean, you could barely even count it, but we have this tiny fair value gap. We inversed. We had more sell side. I'm not even going to switch time frames and all that, but we had more sell side over here. We had swept, reach into this 4-hour fair value gap. Obviously, these are usually pretty strong. So I put a buy order in here. Stop below the low. I think I had a TP at these, about right there. And yeah, get stopped out. And some of my friends were saying, oh, turtle soup. I didn't trust it, man. I don't know, man. And then I ended up getting short around here, and I ended up getting taken out. Okay. If we would follow our AMD, you're so caught up in the 1 minute right now. This was me earlier today. I'm so caught up in the 1 minute. So caught up in some emotions because I want to have a green day and it's the last day of the week, right? And I want to end the week green, which is not a good mindset to have. I'm just being honest. You think we're just gonna, you know what? Let me take away this. You've already seen that trade. Let me take away this. You've already seen that. Take away everything else, right? Okay, what is this? This is distribution. You think we're just going to reverse after distribution? No. We have to accumulate first, manipulate first, and then we can distribute again. So I took I think it was 2 L's right there. So now I'm down, you know what I'm saying? I think I took 2 or 3 L's, which is ridiculous, dude. Absolutely ridiculous, man. Okay, but then what do we start doing, man? And in the process of this, we're in a 4-hour fair value. We should be rejected. We should be rejected. But what does it do, bro? It's got these little false entries in here, right? But ultimately, this is accumulation. The market needs to accumulate, manipulate, and then distribute. it's, if it had accumulated and manipulated into this fair value gap, yeah, it's probably going to reject out of it. But it didn't. You got to keep that in mind. If somebody would have told me this is all stuff I figured out, dude. I've never really watched any ICT videos. I've never watched too many mentors. I would just see a strategy, back test it, see how it works. Not even a strategy, just different confluences. These are confluences I've paired together to make my own model and my own strategy. These are really good, by the way, bro. They should sponsor me. Love sparkling water, dude. Okay, so what are we gonna wait on now? And at this point, I was like, okay, dude, I've done too much already. I should really be done for the day. But I'm gonna give myself one more chance because I have realized where I went wrong. At this point, I realized, I was like, we're in accumulation. Of course, we have to start accumulation. If you have accumulation, you could damn near guess when the manipulation leg's ever and just enter the opposite way. Okay, but here I'll skip too far. Here, though, we finally get some manipulation, actually. So here, we finally get some manipulation away from, how long was this? Like over a whole hour of accumulation, man. But you don't think about that when you're in the moment. You gotta keep in mind the cycles of the market, dude. For real. And this, I took this entry based on the 5 minute. The 1 minute was really not that clear, to be honest. But what do we have? And okay. Let me look at the 15 minute. I didn't like, I was talking about the trident theory, right? I don't like how this wick didn't also come up to here, but this wick is in a 15-minute fair value gap, and this wick respected it and closed bearish. So I was about to get in on that because I mean it kind of meets my criteria, but to just be safe, I wanted to see this get inverse. And like I said, we're on the 5 minute right now. And then the next candle, we do, I mean barely, but we technically inverse it. So this is where I got in at. And this was like my trade of the day. I put on 10 contracts for this one because I was so confident in it. Stop above there. Let me put 10 contracts. But I usually trade with 4 or 5. But this one, I doubled up, man. I was so confident. And I had my stop just a little bit above this wick. I might have, it was about right there, probably. And yeah, this is where I got in at. You can see it play out. Proving my point again here, okay? Proving my point again, right? I mark out the manipulation in red if you haven't figured that out by now. Like this little cute peachy color. We're still in a bullish 4-hour fair value gap. Dude, people are still trying to get long here, but they don't keep in mind the cycles of the market. Dome down Wyckoff theory. All right. What was this? What was this, bro? And I'll go more into the trident theory in another video if anybody wants me to. Because, dude, it's a really good entry trigger from what I found. It's pretty discretionary. Sometimes it presents beautifully. Like the pictures I popped up on the screen earlier. Those are beautiful, which happens a lot, actually. But sometimes it's pretty discretionary. Like, it needs to be in a manipulation leg and sweep some form of liquidity. Like here is a decent example of what I'm talking about. This would be a bullish one, you know. Wick, lower wick. This wick respects this wick and closes bullish. But this is in accumulation, we're not going to take that. Half of trading is just knowing where to take your entry model, dude. I mean, that's, oh my gosh, we have a beautiful sunset. Hold up. What? Look at that, bro. That is so beautiful. Wow. Okay. Anyways, we sweep liquidity here, yes. We do sweep liquidity here. All right, and I'm done for the day at this point. This is just what I'm pointing out. We do sweep liquidity here. We do. We even make an inversion. But guess what the market hasn't done yet? It has not accumulated. So people probably got their damn TPs all the way up here. What does it do? It accumulates. All right, and then you're just gonna be sitting in this chop until the end of the day. Ain't nothing wrong with chop. I used to hate it. I used to be like, oh, choppy day, blah, blah, blah. I like it now. I like it now because it tells me something's coming, right? It gives me a narrative. Look, if you would have got in, this is on the 5 minute. If you would have got in from that sweep, I mean, this looks beautiful. And I mean, yeah, you could have caught some profits here. I'm not saying this is a bad trade. Like, it's, if you're keeping this in mind and you're going for a shorter TP, I mean, honestly, it's not a bad trade, right? Entry here, it'd be like probably almost a 1 to 2. But then after that, if you stayed in it and you're trying to have it come to these highs, you get stopped out. Like, it's just, and it eventually does go to it, but it would have stopped you out first, man. Like, my whole point, if you keep the market cycles in mind, it'll be a lot easier of knowing when to get in and when to get out. Right? And it's just, every day is a reflection. Damn, turns out this video is as long as the other one. I don't care though. This is important. It makes sense. All of it. Like, look at how simple this looks. And the 5 minute has really seemed to be the clearest for me for just AMD. Look. It's so clear. Right? When you're on the 1 minute, you're like, oh gosh, is this an inverse? Is this an inverse? Did we sweep liquidity? Bro, back up. And I'm telling this for myself. Back up, right? Okay, we accumulated, we manipulated, we distributed. You think we're just gonna reverse? No. The market's gotta gather up some more orders. That's how this works, you know? But I don't know, man. One thing I did want to get into though, I found a lot of data, and I'm still kind of newer to this entry criteria I've been using. I back tested the hell out of it. And what I found from all that back testing is, I think I mentioned it earlier, but the only time I use it as a 2 candle formation and not a 3 candle formation is pretty much like right at the market open. It tends to just respect it, tap it once, and then drop. It doesn't tend to have like a 3rd candle. But all these other times, you know what I'm saying? Like, this is beautiful. This is so beautiful right here, dude. We're about to distribute. This was the manipulation. We're just coming up for a retest. We take some extra liquidity so we can get down there. And we make this trident theory formation. I don't know if anyone's come up, and I would like this, like I said, I would like this wick to come up a little bit above, but it's rarely going to be perfect. You know what I'm saying? You're not taking this blindly either. You're taking this with confirmation. I meant, you know, with narrative. Anyways, all glory to God. Read your Bibles, please. Stay calm, stay collected, and have a good weekend.